Hi, I am Anna. I come from www.ntvforex.com. Fedwatch Powell shifts focus from A*STARSA to transparency and inclusiveness analysis. http ntvforex.com News ID 1B95348272029 29:39 p.m. As we expected, the Federal Reserve Fed announced the adoption of a flexible average inflation targeting, with NBSP unanimous support, as part of the revision to the Statement on Longer-Run Goals and Monetary Policy Strategy. The NBSP announcement was made during Chair Powell's speech at the Jackson Hole Symposium earlier today, where NBSP highlighted that the federal funds rate consistent with NBSP maximum employment and price stability over the longer run has NBSP declined relative to its historical average, and therefore the committee judges that downward risks to employment and inflation have increased. The changes follow a series of Fed Listens events, a flagship research conference, and internal discussions, and are NBSP part of a broader program to enhance Fed's transparency and accountability. In fact, Powell stated that public faith in NBSP large institutions around the world is under pressure, and institutions like the Fed have to transparency and accountability to preserve our democratic legitimacy. There are four major economic trends since the great financial crisis that drove the Fed to reassess its monetary NBSP policy framework. First, the decline in the longer-run growth rate of the economy due to slower population growth, the NBSP aging of the labor force, and the decline in productivity growth. Second, the lower level of the neutral interest rate that NBSP has been driven by the fall in the equilibrium real interest rate, which in turn reflects weaker demographics and lower NBSP productivity growth. With nominal interest rates closer to the effective lower bound, the Fed faces a more constrained environment to support the economy during downturns. Third, the significant and prolonged improvement in labor market conditions that led to unemployment rates well below NBSP the expected sustainable level. These conditions helped individuals that had been left behind to find jobs, thereby NBSP revitalizing their communities and increasing the productive capacity of the economy. Fourth, the persistent failure to NBSP achieve the 2% inflation objective due to both the flattening of the Phillips curve, which implies a more muted response NBSP of inflation to labor market tightness, and persistently lower levels of inflation expectations, which hold down actual NBSP inflation. Under the new framework, the committee altered its guidance on inflation from the previous 2% target to a flexible form NBSP aggressively seek NBSP of average inflation targeting that averages 2% over time, and that if inflation persistently falls short of this goal NBSP policy, the committee will likely aim to achieve inflation moderately above 2% for some time. Chair Powell explained that after reviewing the different inflation makeup alternatives, the Fed decided that the flexible NBSP option was better than a formulaic approach. We are not tying ourselves to a particular mathematical formula that NBSP defines the average. Thus, our approach could be viewed as a flexible form of average inflation targeting GA. Moreover, NBSP Powell indicated that inflation overshoots were likely to be moderate and temporary. Therefore, following periods when NBSP inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. Given the emphasis the chairman and other Fed officials have placed on low and moderate income communities, NBSP was also not surprising that the policy goals included a broadening of the employment objective, citing that maximum NBSP employment is a broad-based and inclusive goal that is not directly measurable and changes over time. Owing in NBSP particular, the revised statement indicates that policy decisions will be based on the Fed's assessments of the NBSP shortfalls of employment from its maximum level rather than by deviations from its maximum level as in the prior NBSP objectives. On the one hand, this exhibits the difficulties in measuring maximum employment and the natural rate of NBSP unemployment, and that specifying a numerical goal for employment is unwise. On the other hand, it reflects the Fed's NBSP intention to stress the importance of expanding the benefits of a strong labor market for low and moderate income NBSP communities, which tends to occur late in the business cycle. NBSP thus, as long as tight labor markets can be sustained without price pressures, the Fed will allow employment to run at NBSP or above real-time estimates of its maximum level. Whenever employment is below the maximum level, as is the case NBSP in the current environment, the Fed will try to minimize that shortfall by using our tools to support economic growth and NBSP job creation. During the QAMP session, Powell mentioned that the effects of the pandemic on the labor market have fallen to a large NBSP extent on low-wage workers, minorities, and women, and that the single most important thing we can do here is to NBSP support a strong labor market. However, Powell stated that there are better tools to dealing directly with distributional NBSP issue held by elected officials and the executive branch, and the responsibility should be borne by all government, NBSP all society. In any case, Powell highlighted that millions of people will struggle to find jobs and need support. We are looking at a NBSP long tail of probably a couple of years at least, of relatively high unemployment, as people who worked in those NBSP industries will struggle to find work, and again we need to support them. In addition, Powell defended the Main Street NBSP lending facility as a way for loans to reach SMEs and stated that they have put more effort into this facility than NBSP. Everything else we've done. Nonetheless, he acknowledged that it is going to take more than that. It is going to take NBSP more direct aid, I think, to smaller businesses, and I think that is an area where fiscal policy can really do things that it is NBSP very hard for us to do. Ultimately, achieving these revised policy objectives will also be guided by financial conditions and the committee's longer-run goals, its medium-term outlook, and its assessments of the balance of risks, including risks to the financial NBSP system. In this sense, the Fed will continue using existing and new tools to deal with the macroeconomic challenges of NBSP: low interest rates, low inflation, slow growth, a flat Phillips curve, and relatively low productivity. As Powell indicated, NBSP time is going to tell, and what we do going forward is really going to decide the effectiveness of the changes we NBSP media. With inflation and inflation expectations below target and labor markets recovering slowly, policy rates will remain at the NBSP effective lower bound for a prolonged period. Thus, under the new framework, as long as price pressures remain under NBSP control, the Fed will keep interest rates low even if employment has reached its maximum level. That is, the Fed will NBSP allow labor markets to run ahead to achieve more inclusive growth. Nonetheless, the duration of the low interest rate NBSP environment will depend on how effective the changes are to bring back up inflation and inflation expectations. The Fed will undertake a policy review every 5 years. Whether this is to reaffirm the current plan or come up with a NBSP new one, only time will tell. If inflation and inflation expectations return to 2% persistently, the Fed will be able to raise NBSP rates and scale down other tools that are supporting the recovery. However, if inflation remains below target and the NBSP Fed realizes that the changes have not had the expected effect, they will go back to the drawing board to design a new NBSP game plan. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.